What's up, traders, and welcome back to Explain the Charts. Today is October 21st, 2025, and we are breaking down one of the most traded currency pairs in the world, the GBPUSD, also known as cable. First, let's get a handle on the current market sentiment by looking at the latest news. Headlines indicate that the pound is currently struggling to maintain stability against a stronger dollar, a trend largely driven by diverging monetary policies. The Bank of England is taking a more cautious approach to interest rates, while the U.S. Federal Reserve strategy appears more hawkish, creating significant volatility. Analysts from major institutions are suggesting a period of consolidation is likely ahead for the pair, which is an important sentiment to keep in mind. Short-term movements are being heavily influenced by key economic data releases from both nations, such as inflation rates, GDP growth, and employment statistics. With that fundamental backdrop, let's jump into the charts to see how this is all playing out in the price action. Starting here on the daily chart, we can see the bigger picture for GBPUSD over the past year and a half. The pair experienced a very strong uptrend starting from the lows of around 1.21 back in January of this year. That bullish momentum carried the price all the way up to a significant peak of around 1.377 in mid-September. This 1.37 to 1.38 area now stands as a major long-term resistance level that bulls would need to overcome to signal a return to the uptrend. However, what happened after that peak is critically important for where we are now. We saw a very sharp and aggressive reversal. Let's zoom in on that key reversal period from the beginning of September to mid-October. As you can see, after hitting that high above 1.37, sellers took complete control. We saw a series of large bearish candles, indicating a powerful shift in market sentiment from bullish to bearish. This dramatic drop of over 600 pips in early October erased weeks of gains and firmly established a new downtrend. The price found some initial support around the 1.31 level before breaking lower. This period right here is a perfect example of a trend reversal, and it aligns with the news about diverging central bank policies likely putting pressure on the pound. Returning to the full daily chart, we can see that since that major drop, the price has been attempting to recover. We've seen a bounce off the lows, and the price is currently trading around the 1.34 mark. This level is interesting because it acted as support during the downtrend in late September and is now being tested again. The primary trend is now bearish, so this current upward move could be considered a retracement or a correction within a larger downtrend. Key support levels to watch on this time frame are the recent low around 1.33, the psychological 1.30 level, and then the more significant support down near 1.25 from late 2024. On the upside, immediate resistance sits around 1.345 to 1.35, where the price has recently struggled. Now, let's switch to the 1-hour chart to get a closer look at more recent price action. The hourly data we have here is from the first week of October, right after that significant drop we saw on the daily chart. What we can see here is a period of consolidation, which matches the analyst consensus we discussed earlier. The price action is choppy and sideways, trading within a range between roughly 1.34 and 1.352. This shows that after the big bearish move, the market paused to digest the new price level, with neither buyers nor sellers having clear control. This ranging behavior is typical after a strong directional move and often precedes the next leg of the trend. For the most immediate price action, let's drill down to the 15-minute chart. This shows us what has been happening over the last several days, from October 16th until today. Here, we can see a clear short-term downtrend. Price has been making a series of lower highs and lower lows, moving from a high above 1.347 down to the current levels around 1.340. This price action reinforces the bearish pressure we've identified on the higher time frames. An immediate level of resistance is the recent high around 1.344. If sellers remain in control, a break below the current support at 1.34 could happen soon. This short-term perspective is crucial for day traders looking for entry and exit points. So, let's recap everything we've covered and talk about potential scenarios. The long-term trend has shifted from bullish to bearish after the major reversal at the 1.377 high in September. This is fundamentally supported by the diverging monetary policies of the Bank of England and the US Fed. We are currently in a corrective bounce or consolidation phase within this new downtrend. The key price levels to watch are critical right now. Immediate resistance is at 1.345, with a more significant hurdle at 1.35. To the downside, initial support is at the psychological 1.34 level, followed by the recent lows around 1.33, and then the major support zone around 1.31. So, what are the possibilities from here? First, a bearish continuation seems the most probable scenario given the overarching trend. I'd place this at about a 60% likelihood. A rejection from this 1.345 resistance area and a break below 1.34 would signal that the downtrend is resuming, with targets at 1.33 and lower. This would be reinforced by more hawkish Fed commentary or weak UK economic data. Alternatively, the bullish scenario has about a 40% chance. If buyers can decisively break and hold above 1.35, it could signal a deeper correction, potentially targeting 1.36. For this to happen, we'd likely need a significant shift in fundamentals, such as surprisingly strong UK data or a dovish turn from the US Fed. Finally, continued consolidation between 1.33 and 1.35 is also possible as the market waits for a new catalyst. Watch for a clear breakout of this range to signal the next directional move. Thanks for tuning in to explain the charts. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Always conduct your own research and analysis before making any investment decisions. Trade safe, and we'll see you in the next one.